Alright guys, and here on our news it says top trader has a message for XRP holders. While retail traders were running for the exit and hitting the sell button in a fit of panic, the biggest financial institutions in the world were quietly filling up their bags right as XRP dropped down to $1.08, a massive wave of capital moved in behind the scenes. So if you've been watching the charts move and wondering whether the market is falling apart or building a launch pad, you are not alone. In this video, we are analyzing a crucial message shared by crypto analyst Anna that highlights a massive divide in the crypto space. And this is the battle between fear-driven retail panic and calculated institutional accumulation. So let's dive straight into what is actually happening behind the scenes. So what is happening between retail traders and institutional investors? Right, crypto analyst here, Anna, recently brought to light a stark contrast in how different market participants are handling current conditions. During XRP's latest drop down to $1.08, retail traders panic. People who spent weeks tweeting about buying every single dip suddenly turned around and sold their positions as soon as the asset traded between $1 and $1.20 range, right? Meanwhile, institutional investors did the exact opposite. While retail was fleeing, institutional funds stepped in with massive capital to absorb the selling pressure. Anna points out that $1.08 represented XRP's lowest price point in 19 months. Yet during the exact window of extreme market fear, smart money was busy accumulating. Now here's my opinion. I see this pattern play out in every major cycle. Retail investors tend to trade based on emotion and short-term price noise. When prices drop, fear takes over and people panic sell at the exact moment value is highest. Smart money, on the other hand, operates like a giant sponge, sitting quietly at major discount levels and absorbing all available liquidity. If you sell out of fear between $1 and $1.20, you are directly handing your tokens over to institutions who are playing multi-year game. Now, why did institutions pour $132 million into XRP during the dip? The data shared by Anna reveals a mind-blowing metric. During this recent slump, XRP investment products recorded an astounding $132 million in institutional inflows. To put that into perspective, $132 million was the largest inflow recorded among all altcoins in the entire digital asset market during this time frame. While other altcoins saw capital flight or stagnant interest, XRP became a magnet for institutional capital. This proves that while small investors were convinced the market was dying, institutional asset managers viewed $1.08 as an irresistible buying opportunity. Now here's my opinion. Follow the money, not the noise. When $132 million flows into an asset during its lowest price in 19 months, that is not a coincidence or luck. That is conviction. So in my view, institutions do not deploy $132 million without doing rigorous risk analysis. They see the underlying infrastructure, the legal trajectory, and the utility being built. While fear dominates social media feeds, capital allocation speaks louder than words. Now, is a price rebound from $1.08 already taking place? Following that drop to $1.08, XRP showed immediate signs of resilience, rebounding back toward $1.15. Right? Anna noted that this upward bounce suggests a recovery from the $1.08 level may already be underway. While she made sure to clarify that a massive macro bull trend is not yet fully confirmed, the price action shows that $1.08 served as a solid demand floor. Now, instead of crashing further, the aggressive institutional buying created a firm base, stopping the downside momentum and lifting the price back toward $1.15. Now, here's my opinion. This rebound demonstrates how institutional buying acts as an anchor in a stormy market. When an asset hits a multi-month low and immediately attracts $132 million in demand, it creates a floor where sellers run out of ammo. In my perspective, seeing XRP defend the $1 to $1.08 range so aggressively gives us a clear indication of where smart money values this asset. Once the panic sellers are completely flushed out, the path of least resistance usually flips back to the upside. Now, how could the Clarity Act and Spot ETF approval impact the market? Price action isn't the only thing driving institutional interest. Anna pointed to several major regulatory and fundamental catalysts that are quietly developing in the background. First, there is ongoing legislative progress with the Clarity Act, which aims to provide a clear and unambiguous regulatory framework for digital assets in the United States. Second, the entire market is eagerly awaiting a regulatory decision regarding a Spot XRP exchange traded fund. If approved, a Spot ETF would allow traditional institutional capital to flow seamlessly into XRP through standard brokerage accounts. And finally, Ripple CEO Brad Garlinghouse recently shared that the company is closing in on critical regulatory milestones, further clearing the runway for corporate adoption. Now, here's my opinion. Regulatory clarity is the golden key for the institutional capital. Big banks and sovereign funds cannot allocate billions into assets that carry legal ambiguity. So, I believe the combination of the Clarity Act, a potential Spot XRP ETF, and Ripple's legal progress forms a powerful foundation. Institutions are not buying at $1.08 because of today's price. They are accumulating because they know what happens to institutional demand once a Spot ETF gets approved and regulatory rules are set in stone. Now, why might selling between $1 and $1.20 be a huge mistake? So, looking toward the horizon, Anna issued a clear warning to retail traders. She emphasized that those who choose to panic sell their XRP in the $1 to $1.20 range could end up deeply regretting that decision as the market moves through the coming months. She noted that market sentiment right now is overwhelmingly driven by temporary fear rather than actual fundamentals. While retail sentiment is sitting on the floor, the underlying fundamentals and institutional positioning are pointing in the complete opposite direction. Anna questioned whether this heavy $132 million institutional inflows represents the final accumulation phase right before XRP's next major macro expansion. Now, here is my opinion. Selling at the bottom of a panic range is the classic trap that catches retail traders every single cycle. When you sell between $1 and $1.20 out of fear, you are locking in losses right at the point where smart money is accumulating. So my perspective in here is that do not let short-term emotional sentiment blind you to long-term structural reality. The fundamental pillars supporting XRP are stronger today than they were when prices were higher. And finally, here is our overall conclusion. When we step back and look at the bigger picture, the message from top analysts like Anna here becomes crystal clear. We are watching a classic transfer of wealth from weak hands to strong hands. While retail sentiment was crippled by fear during the dip to $1.08, institutions recognized a 19-month value opportunity and poured $132 million into XRP products, leading all other altcoins in capital inflows. With major fundamental catalysts like the Clarity Act, potential Spot ETF approvals, and key regulatory milestones from Ripple on the horizon, the underlying structure of XRP remains remarkably strong. Now, the key takeaway here is patience and perspective. Market cycles are designed to test our discipline. Those who focus on data, institutional capital flows, and long-term utility will always be positioned than those who react to emotional fear. Alright, and this finally ends our video. Thank you very much for watching and see you on the next one. Or you might just as well check this next recommended video right here.